Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's May 20th. This will be our chart lesson for today. And um, today was an FOMC day, so you got to be really careful trading into that lunch hour. Much after lunch until that 1 o'clock news comes out. And we did have some effect today, not much. Took it all back, and that's fairly typical. Normally, you get a big news spike, the market will take it back within the next hour or so, and then it kind of resets, and you see nothing much at all happen after that. So that's well after 2 o'clock, but nice little run up here and run back down. And you might have caught some of that, but generally, I like to be done before noontime on days like this and just stay away from it because you never know. This is pretty mild for an FOMC day. I've seen days where, it can jump that much in a bar or two if the market gets surprised by something. You can see that occasionally with other news, but lately the market, there's been no surprises. Everything's kind of been status quo and nothing really. But we spent the majority of the day between 21.27 and about 21.22. We had a little failed break lower here early on. Then we got back in the range. We had that breakout after the news. And if you measure first um, this first part of the range and you get a measured move up to here, and we went a couple of ticks higher, then reversed and came right back down. And this is really about where the move started, and we took all that back. And that's fairly typical. So um, you can see how prices are swinging back and forth to both sides of the EMA. That's a clear sign, and it was clear very early that it's kind of a range type day. Doesn't mean that it can't change during the day and turn into a big trend, but that's generally, a good sign that, hey, we're in a range. So it was real obvious that this was a range, and it looked like we might trend lower, but we ended up um, breaking lower, but we got right back in the range and spent the rest of the day in there till the news around 1 o'clock. The FOMC news broke it out, and then it takes it all right back and resets, and that's just really typical. So, but let's talk about the trades. The first trade I saw this morning, I drew this one green because it's really, I mean, you can see prices going back and forth, lots of overlap. There's not much happening yet. It's before the regular session open. Just not a lot happening. It looks like it's actually going to be a failed second entry long. Um, that will give you a short, but when these next three bars stacked up here and could not go lower, you don't want to go short right there. And that's the reason there's no short there. People will send me, I'll do the chart lesson, and people will send me emails and say, well, what about this trade? And they just miss, they miss things, and they miss obvious things. For me, it's obvious. For you, you're learning, so I understand that. But generally, if I don't mark a trade, it wasn't a good trade. Or if I don't talk, generally, if there's something that looks like it might be a good trade and it's not, I'll talk about it. So if you don't hear me talk about it, there's something that I don't like about it. And if you study it close enough, you'll probably figure it out. But if you can't, then feel free to ask me about it. I'm always happy to try to, answer those questions. But yeah, the fact that this broke higher and turned down and it couldn't go out, and then you had another bar, big bearish, but it couldn't break below. That's telling you that this is a trading range here, and you better be very careful because what normally happens is it breaks out and fails, and it reverses, it goes to the top, and it breaks out and fails. And actually, let me just make sure that actually failed. That may be just a double top there. No, it actually looks like it goes one tick higher there, and then it reverses. And I've got a short there. But anyway, there's a failed second entry short here in a trap. So you could go long here. It's a little risky because you're probably better off just to sit and wait. But, this fits the rules. If you want to be aggressive, there's enough room to get out before you get back up here. And, it had a few ticks to spare. Nice long, and then you get that failed breakout, and that's not a beautiful bar, but anytime you get that one tick higher that fails, and a lot of times dojis are where you find reversals, and what happens is that's just an indication that the move is running out of steam and they're starting to become equilibrium before it reverses and goes the other way. So you got to be careful with dojis. They can either be wonderful signal bars or they can be horrible signal bars. So depends on kind of the situation, where they're at, what the rest of the price action is telling you. But you had that failed tick higher here. It's a double top. It's really a triple top, quadruple top almost. And it's obvious this is a trading range. And so this is a good place to enter, as close to that high as you can. And that would have been the best entry of the entire overnight and early morning session. So, and look, it turns out to be a great trade. I went back and forth whether or not to make this one green, because normally you want to wait on a second entry, but you could almost treat this like a second entry because we've already tried going higher once, twice, and this is the third time. So, and you got that little one tick trap up there. So I really like that, and you can see it turned out to be a nice trade. And then you try to go short once, you pull back, and you go short twice. And I think somebody asked me about this trade, you know, what was wrong? They went short right here and it failed, and they couldn't figure out why. Well, there's no setup there. Do you see any signal bar there? Do you see any break of the little trend line moving up yet? This is the first break. Um, Generally, what's going to happen is you're going to get a retest of the high. And really, what you had to treat this like was this was a failed. I mean, there's a triple bottom across there, and this is a failed break lower. And so if you got a real bearish bar here, yeah, maybe you want to go short, but you got a little trend line working up, and the odds are that this is going to be a failed break lower out of the trading range up here, and then it's going to jump back in there. So you don't want to go short here unless you got a really good setup, and all you've got is 1, 2, 3 bars stacked up when this broke lower, 4 by the time this one. There's no signal bar. None of the signal bars look really good. This one might have, but it ended up closing 2 ticks back, and a good signal bar doesn't do that. Good signal bar, is bearish all the way, like this one right here, or um, you know, this one right here. That's just not a very good signal bar. It's just a little congestion area around the EMA, and you aren't getting a lot of rejection off that EMA. So that's a great place to look for a trap, because we're probably going to get back in the range, and most breakouts fail, and that's exactly what happened here. And then you get a little pullback. Now you can treat this like a new low. So that's a first entry pullback, and you could almost treat this like a second entry. It didn't actually break lower, but it gave you that little inside bar a little bit lower, and everything's closing back on the trend line. And we aren't back near the highs yet. We didn't quite actually get there, but generally you would expect that this is at least going to test these highs again, and probably the original highs. And so I wouldn't enter on this one when it didn't go very far and pulls back, but you would have been out of this trade already. I wouldn't add on here, and I wouldn't enter here, because now you've got your break and a couple of legs up, and generally you might get another push and then it reverses. And it's really tempting to go short here, but we weren't quite up there yet. If you took that trade, I'm okay with it. It's a little bit aggressive. It is a nice little reversal type bar, and this it is close enough to be testing those last closes right there. So, I'm willing to give that a green one. It's real borderline, and you just have to be real careful with it. But I think it's probably okay if you take that one. And then you've got a little trend move working down now. You do get a break here of it, but you get a first entry, a little pullback, and a second entry. And if you're not paying attention, this looks like a great long, and it's tempting to go long there. If you did, all I can say is when it reversed, I'd be thinking short. But that was the first break of this little pullback right here, so you're probably going to get at least a retest of the low. And this is a trap, so if you didn't get fooled into going long, you got to probably go short right there. And then you get notice that double bottom there, and you get the little breakout pullback short there, and you figure we're coming back down here to test these lows, maybe even these lows, but it turns out it tests these lows. So another nice little short, and then it bounces. And it's really tempting to go long here. And again, this is probably one that if you took it, I'm okay with it. But the fact that we broke a little lower before and we didn't actually bounce right there like this one did, I'm not so crazy about it. So that's why I didn't mark it. But if you took it, it's probably okay. It's a little aggressive. Would have worked out great. And then you pull down, and you get a failed second entry short here, but now you bounce and you close way inside. And even though that looks like a doji, it closes one tick off the very high. And, on a volume or tick chart, that could easily close either way. And you might have a nice reversal bar on your chart. But I like going long there because now you've got a higher low. Um, and there's actually a little trend line there. I didn't draw it, but let me put that on there. I should have that on there so the rest of you can see it. But there's a little trend line working right there. You get a break, move to a new low, and it reverses. And I drew both of these in green because now you're right in that 1 o'clock hour. And even though it bounces here, it's a little risky. It's a second entry long. It's a higher low. It's a nice reversal bar. Um, and if you get lucky and you get it right, you can ride this all the way, maybe. But I will tell you, I would have to think really, really hard about entering there, knowing that the news is coming out in a couple of minutes, especially FOMC news. So I did circle it in green, but I'm not crazy about it. And the same thing here. There's a pullback first entry, pullback second entry, and it's right at what looks like a trend line. Originally, I had this here, so it didn't look like there's a close, but I adjusted it a little bit later. I believe it's probably more like that right there, and you did get, because that held at first, and then you do get the little close, you get a move up. It doesn't really matter. Either way, it fits, and it ended up fitting off the top, and that's another reason I liked it right there, like that. Originally, I think I actually had it at the close, like so, but either way, it still gives you a close outside, a move to a new high, and then it reverses. So it was a little hard to find this one. You really couldn't almost verify it until you made the new high, and it's too late then. So at the early point, I just kind of had it off the shorter term one going up there, and that would have still got you into this trade most likely, even if you drew the shorter term one. Because you see that up there, and that's the first break, so you figure it's going to make a retest at that high or here. But again, it's right in that news time, and it's really risky, and this is probably moving really fast. It's easy to make a mistake. I think you're better off to skip it, but I did mark it in case anybody took it. I mean, the price action is still valid during news items. The reason you want to be leery of it is because it moves so fast and you don't have time to read it properly, and you get these exaggerated moves like this. If you get it right, these exaggerated moves are they pay off very well. But if you happen to get it wrong, you're in and out in a blink and you just lose money. So it's usually better, you're better off to just let this thing settle down. And by here, it had settled down. This is right at the 2 o'clock. Notice the new high. You pull back, you get a first entry. You pull back, you get a second entry. It fails. You can go short there, and if you didn't enter there, you can go short here, and you could really add on here. So I was a little less interested in going short on this first one, but when it pulled back again, I really liked it. And the only reason I was a little hesitant first is because this is so close to this, what was resistance, it might act as support, and you don't have a lot of room there. But by the time it pulls back, then you got room to get out. And this one really turns out to be a great trade. I mean, it rides it all the way back down. And you got to be thinking that, because most of the time when these news items come back within an hour or two, they're taking it all back. And it's just like the market overreacts, and then they say, oh, we overreacted, and it resets, and then it starts over, and you can see it never really did anything after that. So that's pretty standard for the market to try to take a news item back rather quickly. So, but yeah, prior to noon, there wasn't a whole lot going on, and my guess is that's what most people are thinking. Hey, let's get our trading over before noon and get out of the way before the news comes out, and and this is the kind of stuff that happens. But if you're still trading, there's a couple of aggressive trades here if you want to try to enter during the news, and this was a pretty good setup here. And you really, again, you could have gone short here. It fits the rules, but I just think it's a little risky with that many bars stacking up there and it being so close to that line. So when it pulled on back a little bit and still closes inside that trend line and you got room to get out, then I like it. So, but it's right at the 2 o'clock hour, so it would have been doubtful if you took it or not. But if you took it, I'm okay with it. There's still plenty of time, and this turned out to be like I said, you don't know that it's not going to bounce right here, but you figure you got enough room to get out. You're going to at least get a scalp out of it too. So it's like a little double trap almost. So, and that's pretty much it for today. The last couple of days have been rather mild and quiet. Um, now that the FOMC news is out of the way, we'll see what happens. And here's another thing. Let's just see if I'm guessing. Here's your first move down, and let's measure the measured move. And you can see this went in from one day to the overnight. You still get a measured move. This stuff works. Always use those measured moves. And that might have been something else that I didn't show you on this one. You get that first leg up, and then you get another one up. You really could have measured from here, but the uptrend really started here. I would measure from both of them. And you didn't quite have a measured move here yet. You were real close, but you know you're going to get a retest, and that's when you figure you'll probably get the rest of that move. And because it was a news item, it drove it a little higher. Everybody starts jumping in, and next thing you know, it's running up. And there are probably a lot of people that got short, and they all had to exit. Most of the people that didn't know any better and got short here, they teach you to put your stops up here, so they just ran off. So they tricked these people into entering, and then they ran all their stops up here, and then guess what? They bring it right back to where it started. And these people are all kicking themselves because, you know, everywhere you read, they tell you to, you know, you sell this breakout or you buy it if it breaks out up here. And that's probably what happened. They probably bought the breakout up here, and they end up getting double whammied. So, you know, that's why we don't do that. It's a losing strategy, and anybody that believes that strategy will make money, you're in for a long haul trying to make it work, because it'll work occasionally, and but most of the time it'll work. It'll fail on you, and you'll lose money. So, but not much else to talk about today. Kind of a quiet, lazy day, FOMC kind of day. Everybody's kind of leery of the market. So we'll be back again to do it tomorrow. I'm going to wrap it up for today. This is Mack with PriceActionTradingSystem.com, and we'll see you.